let's stay with equities. At least we're in the midst of AGM season here. For his take on some of the big players, we're pleased to welcome back Marcus Bogdan from Blackmore Capital, live in the studio. Marcus, great to see you.
Terrific to be in Sydney.
Yeah, what a difference it makes, because of course you're based in Melbourne. Sign of the times, isn't it, that we're in the midst of the reopening?
Oh, it's brilliant. And actually, you're seeing that flow through into a more positive stance in equities. The updates that we've had more recently have indicated the positive momentum we're seeing with reopening.
Yeah, this AGM season has kind of been like a mini reporting season, hasn't it? What's been kind of the general themes that have been apparent to you?
Well, I think it's in three parts. The first part was the formal reporting season, which showed really strong results, really strong earnings and strong dividends. And then we went into a period where we're far more uncertain. The Eastern Seaboard was in lockdown, and companies, we saw for the first time negative revisions on earnings. But in recent weeks, with first quarter updates and AGMs across a range of different companies, they've either reaffirmed guidance or they've increased guidance, and we've moved from negative earnings revisions back to positive earnings revisions, which is all really positive.
Okay, so that's obviously reflecting then the broader strength that they're seeing in the Australian economy at this point, that perhaps the worst of COVID is over. Are there any particular risks, though, that they're looking for at this point?
Oh, absolutely. And also you're seeing that in the US as well. So the supply chain issue, the shortages of labour, I think these are global issues, and these things will have to be navigated throughout this period of time. So definitely looking at sort of higher costs to manage, and also sort of focusing on those companies that can pass through those price increases.
Well, let's have a look at some of the ones that's on your watch list. Amcor is one of them. Tell us what your thoughts are on their guidance going forward.
Yeah, so they just reported first quarter update. They reaffirmed guidance of EPS growth of 7 to 11%, but they did call out shortages in their raw materials, both in resins and aluminium, and that affected their first quarter result, but they were still able to manage and supply their customer base. So the fundamentals, I think, on Amcor look particularly attractive. It's on a price earnings ratio of about 15 times. A dividend yield of 4%, and it looks like it will be able to deliver at least 10% earnings per share growth for this year.
Yeah, interesting. Obviously dealing in packaging. You mentioned aluminium. I mean, those prices have gone through the roof.
Oh, they have, and resin prices, aluminium prices, lumber, all of these prices have gone up. Amcor they've got a strong history of being able to navigate price increases in raw materials, and so they do have pass-throughs that they've been able to affect and help their bottom line.
Cleanaway, another one on your watch list.
Yes, well, we caught up with Cleanaway yesterday. TPG have become a major shareholder there at 5%, and they are seeing the first green shoots of recovery, as New South Wales in particular has coming out of lockdown. Their deposit container scheme is starting to increase. They're seeing more industrial activity. So again, I think that all augurs well for the rest of the year.
All right, you mentioned industrial activity. That is clearly beneficial for Goodman Group. Another one you're looking at, because we've seen just how, particularly industrial real estate, I guess, has really gained momentum throughout the pandemic and also now.
Well, Goodman's an absolute sweet spot. They're on that trajectory of supporting online and data usage through industrial warehousing. They've been incredibly conservative on their guidance. They only guided to 10% at the full year result, but very quickly as the year has unfolded, they've guided to plus 15 earnings per share growth for this year. And we expect that trajectory will continue for them.
So let's go back to the reopening play that we're all experiencing. Is this still part of your portfolio?
Yes, it is. And I think a more interesting area of reopening is in healthcare. I think this will be more long dated. It won't explode back in the next month or so. But I do think that there's structural issues around the backlog of patients, of patient screening, of elective surgery. And we're starting to see the green shoots appear in CSL. sequentially we've seen an improvement there in donors coming forward for plasma, and that's starting to get recognised in the share price today. So CSL is one.
Is that, and you're seeing that globally, particularly in the States, because that was a real sore spot for them during the pandemic, wasn't it?
Yeah, absolutely, and it's going to affect this year's earnings, but I think the market is now looking beyond this year for flat earnings, but a very strong recovery in FY 2023. And then there's the other parts of healthcare which I think will recover when people go back to screening and more activity, and that's in pathology, it's in diagnostics, and then ultimately the recovery in the private hospital system.
So what's your exposure in the portfolio at the moment to that healthcare space?
We're overweight the healthcare sector, and we're across sort of 5 key names. The largest holding is CSL, then we've got Integral Diagnostics, Helios, Medibank Private, and then the largest private hospital operator in Australia, Ramsay Healthcare.
Okay, tell us a bit more about Ramsay and what you're seeing ahead for it.
Well, you're starting to see elective surgery coming back into New South Wales with a 75 capacity. They're the largest provider in Australia, and what we're also seeing is that the public system can't cope with the backlog. There's still a lot of constraints on what can happen in the public hospital system, and now they're contracting with the private sector to help with that backlog. And that's not only a phenomena that we're seeing in Australia, but we're seeing it also in their other markets, given that Ramsay is the second largest healthcare provider in Europe and the largest provider of NHS services in the UK as well. So the net result is that there won't be a sort of a sharp recovery in the next month or so, but sequentially we can see an improvement over the next year or two.
Marcus, did you make any changes to your portfolio post the RBA meeting this week, given their change in rhetoric?
No, not yet, but it's under analysis. But I do think that with potentially higher bond yields going forward, we're much more careful on growth-orientated stocks, and we do have that emphasis on probably the recovery plays, the good consumer staple companies as well.
Do you have a conviction just as far as when we're going to start seeing rate hikes?
Well, the only thing you know about a forecast, it's going to change. That's the only definitive
not
answer.
if you're the RBA though, apparently.
Absolutely. So given how strong inflation is, I think for Australia, they need to see the wage growth come through, and I think that will then give them the conviction to maybe do something in the second half of next year.
Marcus, terrific stuff. Great to see you live in person.
It's a pleasure, absolutely. Thank you very much, Andy.
Thanks so much.